We are going through a time where the world is becoming increasingly authoritarian and fascist. Their public liquidity ecosystem, which is all about traceable money that can be frozen, controlled, and automatically taxed, that's going to happen. But you can't have a yin without a yang, and the privacy liquidity ecosystem is going to explode, and we are going to help it explode, and we're going to make it a viable mainstream alternative to the public liquidity ecosystem. So keep an eye out, especially when our mobile swap services are live.
Take the first step towards online privacy. Get NordVPN.
The Keystone wallet is the wallet that you want to be using to keep your crypto safe. Whether you are a Bitcoin maxi or an altcoin lover, it is perfect for you. Easy to use, 3 secure elements, and integrates easily with MetaMask, Kepler, and dozens of other extension wallets. Get one now to keep your crypto safe and secure. Go to bit.ly/CryptoRichKeystone. Hey Dr. Cap, thank you so much for making yourself available. You are the lead or the CEO or the founder of Basicswapdex, is that right?
I'm actually one of the lead advisors, so I'm definitely one of the lead public faces for the Basicswapdex project, yes.
Yeah, and you're also connected to Particl, Particl, which I know about. We're not going to get into that now, but I know about it from 2017, this like OG of the privacy crypto space, right?
Yeah, so Particl project is actually the parent project for Basicswapdex, and essentially it's the same team. Basicswapdex happens to be one of the products by the Particl project. So essentially, yes, I'm one of the lead public-facing advisors to Basicswapdex, and also by extension, one of the lead advisors to the Particl project. Yeah.
Right. Okay, and we will talk. We're going to do a separate video about Particl where people get into that. Okay, so Basicswapdex. This is a DEX for swapping, and it's kind of basic. Have I assessed it correctly?
I think so. Do you know much about atomic swaps?
Yes. So for people who don't know, right? Let me say it this way. So if I want to swap an ERC20 token to another ERC20 token, it's really easy because they're on the same blockchain. They run on Ethereum, right? Same with if I want to move from a Polygon asset to another Polygon asset. If I want to go from the Ethereum blockchain to the Arbitrum blockchain or the Polygon blockchain, then I got to use a bridge, which sort of wraps the tokens so they can run on the destination blockchain. The problem with an atomic swap, or if I want to swap from Bitcoin to Litecoin that run on completely different blockchains, it's difficult because they're in completely different blockchains, and also because they're not because they're not layer 2s or whatever it is, right? You can't wrap Bitcoin to run on Litecoin because Litecoin's not a smart contract. So what an atomic swap does, and correct me if I missed something out. So I send you Bitcoin, you send me Litecoin, and the swap happens directly between Bitcoin and Litecoin with no intermediaries, no bridge mechanism, no wrapping mechanism. We get the pure native Bitcoin and Litecoin.
Yeah, that is essentially exactly what happens. So it's a straight swap between chains with no wrapping of assets. There's no sort of central authorities. There's no central trust dependencies on this. You effectively synchronize 2 blockchains and it's a straight swap. On a technical level, how it works, essentially the principle to understand is that the sum of private keys is equal to the sum of public keys. So what happens is there's a set of instructions that is a set of messages that is passed along, but essentially there is a public key that is the sum of the public key on one chain, that's half of it, and the public key on the other chain. And then the sum total of that equals the sum total of the private keys for that condition. So then in order for the contract or the swap, to execute, well, basically it's basically like saying, okay, I want to send this much Bitcoin from address A on Bitcoin chain to address B on the Bitcoin chain. And I've got this much Litecoin, which I want to send from address C on the Litecoin chain to address D on the Litecoin chain. Now I'm going to link these 2 up so that essentially when I send the Bitcoin from address A to address B, it triggers Litecoin to send from address C to address D. And how I do that is I create this kind of public key that is the sum of 2 public keys for that transaction on each corresponding chain. And then what happens is during the steps, you don't reveal the private key, but essentially once how do you say this? If you subtract the private key from your private key from that combined public key, you can get the other half of the private key for that transaction, not your private keys. So, sorry, this sounds crazy, but
do you know? Let me put it this way. Let me put it this way, right? So this is my understanding of it, and so you and I are going to do a deal. I'm going to send you 1 Bitcoin. You're going to send me 100 Litecoin.
Yeah.
And probably its price. I'm just making that price up, right?
Okay.
But it's probably. I imagine the DEX prices it from some exchange or CoinGecko or CoinMarketCap or something like that. And we say, okay, we'll do that. I send you Bitcoin from my address to your address. You send me Litecoin from your address to my address.
Yeah.
And the DEX synchronizes the transaction so that when one sends, both get sent.
Both get sent at the same time, essentially.
And both get received approximately the same time because of the blockchain consensus mechanism.
And that essentially happens because they create a shared secret between each other. And when you basically execute your end of the contract, it reveals that shared secret to the other end of the contract, and that triggers execution of it.
Yeah. I just thought of something, right? Imagine 2 portals or 2 portholes or whatever, right? And I pass the Bitcoin through, and as I open up this door or the porthole and pass the Bitcoin through, the other door automatically opens up because you're passing the Litecoin through.
Yeah. So exactly.
It happens at the same time, and because the DEX creates the communication that allows it to do that. Now, atomic swaps are incredibly, incredibly clever. They've been really, really challenging. But what it allows for, because I imagine that Basicswapdex is peer-to-peer. There's no counterparty. Because ordinarily, if I wanted to buy Litecoin with my Bitcoin, I'd have to go to an exchange. And then I'm at risk because the exchange might crash. They'll charge a fee. It might get captured by regulations. But is that correct? So decentralized peer-to-peer exchange.
I mean, that's exactly correct. Essentially, the problem with trading a cryptocurrency for most people is, at the minute, the majority of cryptocurrency is traded on centralized exchanges. Now, cryptocurrency was essentially invented to get rid of traditional banking structures. What's the problem with traditional banking structures? Well, say I have like $1 million worth of, £1 million worth of cash hidden under my mattress. Well, I've got to then store that. I need to have the security around that. I have to kind of maintain that. Rather than, banks came along and they said, hey, listen, rather than you worry about that million under your mattress and someone jumping through the window of your house and taking it all, you give it to us. We'll handle the security. We'll handle the storage. And, we'll make it more easy for you to transact with other people by using our services. So traditional banking used to offer all of these various conveniences, but it came at a cost. You were no longer whilst you had a claim to the money that you deposited in the bank was your custodian. You were no longer the custodian. And then the banks could impose all of their rules. And this is what's now happened, really. The banks can say, oh, we don't happen to like who you happen to be transacting with. We've frozen your account. Or you can't do this transaction because it doesn't comply with our rules, even if that transaction is completely legal. Really good example in point. If you happen to bank with RBS NatWest, if you try to send more than £3,000 to Coinbase, they will stop it. Completely legal transaction, or any centralized exchange for that matter. But if you try to send over 3K, they will block it outright because they're trying to protect you, the customer. Even if you know exactly what you're doing, even if you know all the risks are and you accept them, they will simply say flat out no. So banks exert a lot of control over how you manage your own money. And this is a problem because you see this with centralized exchanges too, such as Coinbase, such as Kraken, such as Binance, and such as any other centralized exchange. You've got the risks there that they can arbitrarily freeze your funds or stop or freeze your transactions or even revert your transactions, and even if they're legal. If you just happen to fall foul of one of their arbitrary rules. And the other things are, you're also trusting, like with the banks and like with centralized exchanges, you are trusting that these guys actually run decent security. So there's always a risk that someone's going to break into the bank. There's always a risk that someone's going to hack into a centralized exchange. And these bank robberies happen, and these centralized exchange hacks happen, and people lose funds. People lose money. It has happened again and again and again. So you are not really in as much control of your money as you think you are, and you don't really have you don't have optimal safety by any means. There is risk. In addition to this, the banks charge significant fees. Whatever interest you think you are getting on your savings account, banks are typically making about 5 times more because they're playing around with your money on stock markets. Whatever, you don't really even make the interest on, you don't really make interest on centralized exchanges, well, unless you're staking or utilizing their yield services, but they'll take a cut.
Yep.
And the other thing is, whenever you wish to trade on centralized exchanges, there are third-party fees set by the exchanges themselves because they are businesses and they want to profit. This is the same thing with banks. Now, here's the beauty of it. Decentralized exchanges, truly decentralized exchanges, particularly atomic swap dexes, they have no third-party fees. You are the full custodian. You are fully in control of your funds at all time. There is no risk. Because of that, there is no risk that your funds are going to be frozen. There is no risk that some third party is going to come down and say, you can't transact with this person, you can't send to this address, you can't do this, that, Y, X, Y, Z. There is no risk of that. Because you are the custodian of your funds, there is no risk of some third party hack suddenly breaking that infrastructure, leading to you losing your funds. The only way you lose your funds is if you give up your private key. So you are the locus of control. You are the focus point here. And you get an incredible level of security, an incredible level of privacy, I might add, because A, you don't have to provide KYC to use a true sort of atomic swap DEX. No one's going to ask you for your name, no one's going to ask you for date of birth, no one's going to ask you for your address, no one's going to ask you to upload your passport.
Or my digital ID.
Or your digital ID. And when you upload these things, therefore, because you don't have to give this information, it's no longer because it's not been given to anyone. Even if those services break, or there's nothing to extract because that data has never been given. So you don't have the risk of data hacking and data theft and identity fraud that exists with centralized exchanges or traditional banking services. So this is the basis of utilizing true decentralized exchanges.
Yep.
I'm going to say this. Basicswapdex is the world's most decentralized, most secure, most private atomic swap DEX.
Okay, hold on a second here. Also
the cheapest atomic swap DEX, but yeah.
Okay, so let's just take it back a little. First of all, when the banks do this, they say, we're going to protect you. We're looking after you. They're bloody lying. They're looking after their own bloody interests because cryptocurrencies are eating their lunch, and they don't get to grab a share of the market anymore. They can't get a cut as rentiers on the transactions. Then the question that I had listening to you is, one is you say it's more secure. Well, there's things like, and we'll cover this, right? Things like hacks, and how secure is it, and is it open source, and what if there are bugs? But also, liquidity is a problem because if there's nobody there, I want to sell my Bitcoin, but there's nobody on the other side who's going to sell me their Litecoin, then what is the point of it? And then also, there are others. There's exchange aggregators like ChangeLly and ChangeNow. Okay, they're not decentralized because they just go to exchanges in the back end. But also, they've proven to be reliable over time. They may be a little bit more expensive because they take a cut. But there is Komodo's atomic swap DEX, which has been going for a few years. There's also ThorChain, which admittedly I don't know much about. So how can you say that yours is the cheapest and the best and the... Well, I mean, you
quite confidently. So Basicswapdex started proper development in 2019 and 2020. Our key premise is that the entire architecture of our DEX, from the ground up, is built with decentralization and privacy in mind. Now, to kind of give the context here, we were the first atomic swap DEX in the world to enable bidirectional atomic swaps of Monero. So for a very long time, we were the only DEX in the world that supported atomic swaps for Monero and Monero-type privacy coins. So any privacy coin that lacked programmable inputs, our atomic swap method essentially enabled that. So to put the context there, atomic swaps are great, provided, before we came along, atomic swaps were essentially great, provided both coins being swapped permitted what's called programmable inputs, so that you could run scripts to enable the exchange of messages for an atomic swap to occur. Now, privacy coins like Monero, which utilize ring CT, other privacy coins such as Beam or
Piratechain?
focused coins again. Yeah, Piratechain,
Piratechain?
exactly. So yeah, Piratechain, exactly. Zcash, any sort of Litecoin, Mimblewimble, Beam. I keep
Zano?
sorry, I'm going back and forth. But there are a bunch of privacy coins where they don't have native programmable inputs. Therefore, because of that, they couldn't participate. It wasn't possible to use the traditional technique of atomic swaps, which is called HTLC. You couldn't use that method because that was pretty much the requirement.
One second, I don't want to get too technical, and I'll tell you why. Because I think where there's value in terms of mass adoption is in not getting too technical, but people understanding. Like, I know how a fridge works. Well, I don't know how a fridge works actually, but I know I put my food in it; it keeps it cold. I don't know how a car works, but I know how to use it. So let me try it this way with the portal with Bitcoin and Litecoin, because they're visible on the blockchain. You can see through the window and say, "Yep, Rich has got that amount of Bitcoin," and I can see, "Yep, Dr. Cap has got the amount of Litecoin that he said he's going to swap." The challenge with a privacy crypto like Piratechain, and full disclosure, I'm one of the voluntary crew at Piratechain, is you look through the portal, you can't see anything. You don't know whether I've got one Piratechain or a million Piratechain, and the same with Monero or whatever. So then, how do you do atomic swaps there? That's
The short of it is we utilize a method called adapter signatures, which permits atomic swaps for coins that lack programmable inputs. But that is not the only privacy feature. If you look at our architecture, all of the order book is built using a messaging layer called SMSG. It's a protocol that results in end-to-end encryption of all messages sent through our network. It's a peer-to-peer network, first of all, so it's community-driven. So basically, people run up instances of Basicswap as a server-type instance and their own home, and then that effectively connects them to the network of Basicswap nodes. Those nodes are communicating with each other, passing messages along in an end-to-end encrypted fashion, so third parties can't see what those messages are.
Sorry for interrupting. So even if you and I are doing Bitcoin and Litecoin, other people can't see it?
They can't actually see that it's very difficult for chain analysis or a third-party analytics company to know that the swaps have occurred, because the adapter signature techniques we use effectively don't leave traditional timestamps that the old HTLC atomic swap method does. So you can't, if you're a third party, you can see that Bitcoin has gone from A to B, but you can't easily link that from Litecoin going from C to D, even if they were involved in a swap. So that's the first thing. A third party can't look at our network traffic and say, oh, these particular nodes are hosting these offers, and these particular nodes are taking these offers, because the messaging between nodes is encrypted end to end. So you can't even, it's difficult to even tell what the daily volume is, because all of that traffic is fully encrypted. As I said, the actual fact that swaps are occurring, it's difficult to tell. Wow. And if you're utilizing privacy coins, which is something that traditionally couldn't be done through atomic swaps, you've essentially got three: layer 0, layer 1, and layer 2 privacy. So you get the benefits of privacy coins with the benefits of masking that they're involved in swaps, with the benefits of third parties not being able to see the network traffic. So we are the world's most private DEX. We are the world's most, I would argue, our architecture permits the most scalable and decentralized solution, because our order book, because of that network of nodes, is fully decentralized. And we're actually immune to certain other risks. So to draw a comparison, liquidity pool, we're not a liquidity pool DEX. Mm-hmm. So it utilizes what's called distributed order books. So if you put an offer of, say, 10 Litecoin for 1 Bitcoin, that is the offer. It's not that it gets pooled together with all of the other offers and then you get this average price, and then suddenly, if someone's providing most of the liquidity to that pool and they pull, that the price suddenly falls. You don't get that risk. Whatever offers are on there, that is exactly what you will get. So you don't.
It is buyers and sellers negotiating between each other. I could put up a price. Okay, I will sell you 1 Bitcoin for 5 million Litecoin, which is ridiculous, right? And I post it. Now, of course, you're not going to match that. Are you kidding? Are you kidding?
And that's the nice thing. You're not going to suddenly see the average price shift so that the takers are getting this weird average price. No, that offer will just be there. And if someone wants to take it, that's completely up to them.
Okay. Then what about the issue of liquidity? I mean, is it live now? How many users are there? Because let's say if I put in a standard, or the market rate for Bitcoin to Litecoin, is someone going to take my trade?
Yeah, so yes, there are people running, that there is liquidity on there. Our most liquid pairings are relating to Litecoin and Monero, and that reflects the communities with whom I think we've got very good relationships with all of the privacy communities, but with Litecoin and Monero in particular, because they just happen to be naturally quite liquid coins, they happen to be fast and cheap to transact with compared to Bitcoin. That's where we get most of our liquidity. We do support Bitcoin, we do support Firo, we do support Dash, we do support Monero, PivX. I'm going to start to forget. There's a whole list of coins that
Zano,
we support.
Piratechain?
No, we don't have. So there is work being done for the ZE. So which one was that? It's Dragon Chain X. So basically the Jub. So that we just need that there is work that's being done to effectively support coins that are historically linked to Zcash.
Mm-hmm.
So it's the main dev from Hush was doing some work. We are looking to get that in, okay, and then if we can get that in, then we'll get Piratechain, and then it may actually be worth. I think it's something we need to revisit. Is kind of bringing together Piratechain, Hushcoin, Zcash, and kind of saying, listen, if you guys want to help accelerate this work, then we can get ZEC. We can get R.
Okay, R. I can connect you with the team at Piratechain, and also someone in the team in Zano. I know how Komodo, their DEX does atomic swaps with Piratechain, because the problem with Piratechain is it's completely invisible. Way more private, larger privacy, set than Monero. Is that if, for example, I want to send you 100 Piratechain, you're going to send me, I don't know, 10 Litecoin, then it breaks the transaction up into tiny amounts. That's how it does it. That's how the Komodo DEX does it. And then with Zano has this really great feature where I can send Bitcoin onto the Zano blockchain through a decentralized bridge, and it hides the Bitcoin. The Bitcoin is then invisible. And Zano is a fork of Monero. So it uses the same crypto note algorithm. It's based on that. So I can connect you with that. We can do that later, right? Now, but then what about so you're saying there's sufficient liquidity. It makes sense for Litecoin and Monero, because Litecoin is just, OGs would have moved from Bitcoin to Litecoin because it's cheaper and faster, and then you move it to Monero. Then is it live currently?
Yeah, so this is so it's been live for a couple of years. Now I'm going to basically talk about the current pain points. It is a great solution, but you are running a node that effectively acts like a server, and it sends messages back and forth to other nodes. So in order for it to function, you need to leave it running 24/7, because it's utilizing atomic swaps, which are straight cross-chain swaps. You're running this home server that is downloading and syncing all the blockchains that you want to swap with. So if you just want to do Bitcoin and Monero, fine, you download and sync those chains on your local machine, and you run that 24/7. So that way it can keep sending and receiving messages. If your node goes offline, it stops receiving messages, you disconnect from the network, you get what I mean, you lose the order book. So these are pain points for ordinary people, because most ordinary people, they are casual end users who just want to do, occasional trade once every blue moon. So the current iteration of Basicswap is really built for power users and for liquidity providers and market makers. Now, what's really interesting, as partly why I'm on today, is that we have figured out how to make it so that we can get atomic swaps to work on mobile and web devices with with very minimal trade-offs in decentralization, and no trade-offs, as in no loss of privacy and no loss of security. So we've made some massive technical advances, and we're actually doing that integration work right now to build the effective integration module to allow Basicswap to effectively communicate with mobile wallets. We can announce that one of our first so how this will work is that Basicswapdex, you'll be able to utilize Basicswap as a swap service similar to like StealthX, Changely, any of the traditional centralized swap services that you know about. What will be coming is Basicswap, which will be a decentralized swap service that has no KYC. It will be fully non-custodial, and it will have all of the privacy features that the base version of Basicswap has. the trade-off to it. So that's the key thing. So it will be a service which casual end users can basically use, and they can basically access the swap service without having to download and sync a bunch of blockchains on their phone, which isn't really practical or possible, and without having to leave the application running on their phone constantly. So it's literally like, oh yeah, I want to go use Basicswap. All right, I'll go into my, say, Litecoin Nexus wallet, because one of our first integrating partners, which we can publicly announce, is we've teamed up with the Litecoin Foundation, and we're actually going to, when this is ready, the first implementation of Basicswapdex on mobile is going to be as a swap service accessible via the Litecoin Nexus wallet. So say you're a casual end user and you just want to swap cryptocurrencies without doing KYC, with maximum privacy, without having to physically hand your coins over to a third-party service that's centrally owned, who could potentially freeze your funds, who could potentially, block your transactions. Instead, you could go to Basicswapdex and use that within, say, the Litecoin Nexus wallet, and there's no KYC. No one's going to ask you for your name, date of birth, yada yada. And when you use our swap service, you're free.
Yeah, financial sovereignty, which gives us individual sovereignty and sovereignty in real life, right? Okay, now, does the Basicswapdex, will it do some of the, we talked about Litecoin and Bitcoin and some of the privacy cryptos. What about other major altcoins like Solana, Ethereum, XRP, ADA?
So this is going to be, so Basicswapdex is excellent for UTXO-based architecture.
Right. Now, for people who know, that means one way of understanding that is the proof of work cryptocurrencies that use the same sort of basic algorithm that Bitcoin and Litecoin do, which Ripple's not UTXO. It's not proof of work anyway, because I think they've created them all. I don't know if Cardano's not proof of work either. So it's got to be a proof of work coin.
Well, it doesn't have to be a proof of work coin. It just needs to utilize a certain type of architecture. So, for instance, Basicswapdex, a lot of the coins we utilize, it supports Particl coin, and it supports Fero and Dash, and they utilize proof of stake elements, for example. Right. So in cryptocurrency, there are two broad architectures through which blockchains can run, and one of them is called account-based, and the other is UTXO. Now, Bitcoin, Litecoin, and all the coins that we support typically have UTXO architecture. It's an architecture that is easy for us to support our type of atomic swaps. We have looked into building the support for account-based coins, such as Ethereum, Solana. I don't know XRP's underlying architecture, actually. And I think there is further work that needs to be done to get that in. Interestingly, how you say this, on our roadmap is the development of a privacy-focused stablecoin, which we will call USDP, and we will run this on Basicswapdex, or it will be, and what it would be is something that would allow you to swap, say, USDT or USDC into our USDP. That would be one-to-one, and it would be, I guess it's bridged, but it would be bridged to a decentralized network, not bridged to a trusted custodian. Does this make sense? It's a bit like what you mentioned with Zano earlier, whereby, yes, you're swapping it one-to-one, but what you're swapping it into, it's actually being held in a decentralized, almost non-custodial manner, in a sense, if that makes sense.
Yeah. Okay. Well then, for people running the nodes, do they receive a reward? What about the fees? And then how are you funding this venture?
So this has all been driven through the community-based funding. So as I said, we have really good relationships with the Monero and Litecoin community. We're actually doing an active fundraiser with the Litecoin community at the moment. So if you go to sort of Litecoin's community funding portal, Basicswapdex is on there. I think we've raised $50,000 with them in mixed donations. With the Monero community, we had a CCS grant, and they gave us several hundred Monero, which has been really pretty quickly. And that actually helped us a lot over the last year. Prior to that, this sort of goes back to the Particl project. The Particl project, which is the parent project of Basicswap, they have their own blockchain, and that utilized a treasury model. So funds from that were being used to help support the development of that, although we'll talk about Particl separately. So this has been a community-driven effort the whole time, reliant on donations from various crypto project communities, as well as support from our own community. In terms of the financing model, so Basicswapdex, if you run it at home, there are no third-party fees. It is only the transaction fees for the network. So, whenever you swap Bitcoin, there's a transaction on the Bitcoin network, has a fee, whatever, but there's no third-party fees. So it's a really good question. How do you actually make money from this? Well, we won't monetize the home version ever, period. That is not something we plan to do. However, the mobile integrations, I said we can publicly announce the Litecoin Nexus wallet integration. We have about 4 other potential wallet integrations, all of which are pretty major, which I won't announce because they're all sort of verbal agreements. But with our mobile integrations for Basicswap as a swap service, we can implement a fee structure into those. And essentially, that's a fee structure that would benefit the integrating parties, and it would potentially be a buy and burn of the part token, which is the native token of the Particl project. So in a kind of, if you think of BNB as like the coin of Binance, then for kind of mobile integrations, the convenience cost of privacy, if you're just a casual end user who wants to do a swap once in a blue moon on a swap service or etc., fine, there is going to be a third-party fee. And that's what you find with all the traditional swap services anyway. But what I can say is, because of our underlying architecture, we can always run that fee to be cheaper than any centralized exchange service provider, irrespective of how big we scale, because our underlying architecture is fully decentralized and community driven. So no matter how big we get, our security remains just as good, our privacy remains just as good, our no KYC stance remains completely solid. And I guess that's the thing I want to say is, if you're a centralized swap provider, you have to charge fees. There is a profit model in place. Their costs go up as their services expand, as their user pools expand. They have to spend more on security, on underlying server architecture, on maintenance, etc., etc. We don't have that issue. So we can always offer the lowest third-party fees if you're using the mobile swap service. If you're using the home version, there's no third-party fee. So I just want to say that the home version is for people who want to provide liquidity. They will always get an arbitrage advantage. They will always get, because they can arb against the traditional KEXs. They will always have an edge. That is the simple
So
truth.
for one Bitcoin, if I go through a centralized exchange, I might get 99 Litecoin. But if I go through the Basicswapdex, I'll get 100 Litecoin.
Yes.
Because there's nobody taking a cut of that transaction. Okay.
So there are.
All right. So the SwapDex is live. People need to download it and install it. I have all the links in the description below. Is the code open source?
Yeah, it's open source.
Brilliant.
So,
and what are you going to do to increase liquidity and get the word out about this?
So partly being here today, we do a lot of appearances. So this has been a slow burn, community-driven effort. I have done lots and lots of appearances on lots of places in lots of communities. So we are well known as a service amongst. You mentioned Zano. Actually, I met Powell, one of their lead developers at Monerotopia. It is surprising how many different projects that we have links and relationships with. And the way I look at this is how you get liquidity. I think that implementation of that mobile swap service, because we will be delivering a product that is easy for your grandma to use, that people are familiar with, but offers every benefit over traditional KEXs and traditional swap services. All those issues I mentioned about banking and KEXs at the beginning, they don't exist with Basicswapdex on mobile integrations. You don't have those risks of frozen funds. You don't have those risks of the swap service has been hacked, you've lost your money. If your phone gets hacked or you lose your private key, that's a different story. But you don't have to be like, oh, I've just handed my money over to Dave down the road. I'm going to trust that he's going to handle it responsibly. That's not the issue here. And, you don't even you're not telling Dave, oh, by the way, this is who I am and this is where I went to school and this is my annual income and yada, yada, whatever. oh, you can only use my service if I tell you, if you tell me X, Y, Z, and who your first cat was at the age of 10.
Right. If you're
None of that.
If you're up to date with your boosters and it shows on your digital ID, then you can use my service.
And the point I'm trying to get at is we're deploying a mobile swap service that is going to be cheaper than any traditional service, has better security, better privacy, and is no KYC. And this can be maintained irrespective of how we scale, irrespective of scale. These are advantages on a business level we have over traditional KEX models that they can never replicate because of the nature of their underlying architecture. We have all the incentives in place for mass adoption. As demand for the swap service grows, that creates organic demand for liquidity providers to install Basicswap in their home and run the there are automated market making scripts within Basicswap that you can run within its GUI to automate the provision of liquidity, to automate your trading experience. So it's literally, you can set it up, put your funds into your wallets in Basicswap, in your home server, and just leave it running on a liquidity script with your particular settings. And anyone can become a market maker if they install Basicswap at home. Anyone can provide liquidity to this. All the people that we've talked to, the businesses that we've talked to, they get it. They're like, oh, there's no third-party fees on running a home instance. So we have an arbitrage opportunity, and we have superior privacy security, and we don't have KYC. This is insane. And you have an API that integrates into mobile devices to offer a swap service that is superior to every other swap service that currently exists. Why wouldn't we?
Absolutely, absolutely. And if people want to find out more, there's Telegram group, Discord.
Yeah, so we have linked Element and Telegram channels. So Basicswapdex. You can go to Twitter at Basicswapdex. If you want to find me, I'm at dgraderstock on Twitter. But there's, and our website, basicswapdex.com.
Yeah, I'll have those links in the description below, and I do invite people to check it out. Is there anything else you want to let us know before we finish up?
No, I want you guys to be excited about the future of privacy, sovereignty, and decentralization. Look, we are going through a time where the world is becoming increasingly authoritarian and fascist. Let's not beat around the bush, okay? Their public liquidity ecosystem, which is all about traceable money that can be frozen, controlled, and automatically taxed, that's going to happen. But you can't have a yin without a yang, and the privacy liquidity ecosystem is going to explode, and we are going to help it explode, and we're going to make it a viable mainstream alternative to the public liquidity ecosystem. So keep an eye out, especially when our mobile swap services are live.
Fabulous, fabulous, fabulous. Thank you, thank you, thank you. Have all the links in the description below, and completely agree with you. There is no sovereignty without privacy. There is no freedom without privacy. So privacy is critical for us to maintain our freedom, our sovereignty, our liberty, and it is our salvation from the increasing authoritarianism and fascism and centralized control that the collapsing fear-based system wants to impose upon us. This is Crypto Rich and Dr. Cat signing out. Basicswapdex.com. All the best. Bye-bye. My wife and I have been happily married for over 25 years. However, there's no stopping the march of time and the slow, steady decline in testosterone level. Luckily, I've discovered a natural, safe herbal formula that boosts testosterone levels. My wife and I are still happily married, but she now complains that I'm being a bit of a nuisance. You too can be a nuisance by boosting your testosterone levels naturally. Go to bit.ly/CryptoRichBoost and boost your testosterone levels today.